There are so many different ways to invest in real estate that you should not limit yourself to the first thing someone else recommends. Maybe you don't have the income, credit, or experience to borrow. Maybe you don't have or even want to commit the capital to buy. Or you simply might not want to deal with being a landlord. Are you trying to figure out where in this industry you fit in best? Then this video is for you. Today, I'm going to provide an overview of all of the various types of real estate investing, the way I see it. The goal is to give you a roadmap so that you can decide where you want to dive in deeper. So are you ready? Good. Fred? Start the timer! Okay, I put all real estate investments into 4 categories: holds, flips, equity, and debt. Holds. This is ownership of real property with the intent to profit from it over a long period of time. There are many different asset classes and strategies available for holds. There's residential, commercial, and land. You plan to profit either through appreciation, cash flow, or a mix of both. Appreciation would be an increase in value of the underlying asset. Let's say your piece of land will be worth a lot more in 30 years. Cash flow comes from an income-producing asset, so this house may not be worth much in 30 years, but you made so much money on it year after year for those 30 years that you recouped your initial investment and more. Flips. This is transferring real property. You're pretty much looking at the same asset classes that I mentioned for holds, but your goal here is to resell for profit in a relatively short amount of time. The way you profit is by purchasing below market value or by increasing the value through rehab, redevelopment, or repositioning. Rehab the house, sell it for more. Redevelop land, sell it for more. Reposition an old C-class apartment into B-class condos, sell those for more. Wholesaling, which is basically getting a contract to buy property under market value and then selling that contract to another investor for a cut. I would classify that as a flip. Rental arbitrage, where you lease an apartment and then rent it out short term for more money, another type of flip. Real estate developers will acquire land and in short time frames, they will build the infrastructure, construct the property, and then sell. If it's a mall or mixed use development, it's being sold to a company that specializes in those types of holds. Equity. This is investing into a company that does holds or flips. Instead of buying real property, you're buying equity of some larger entity with exposure to real estate investments. The easiest way to do this is by purchasing shares of publicly traded real estate companies, real estate focused ETFs and mutual funds, or REITs. REITs are companies that own and operate large amounts of commercial property and are legally required in the US to pay out a significant portion of their income to shareholders. Another common method of equity investing is to buy shares of a syndication. This is a deal that is funded by a network of connected investors who pool their resources together and receive a corresponding take. If it sounds a lot like crowdfunding, that's because it is crowdfunding. And now that crowdfunding is ubiquitous, you no longer need to be connected to a syndication. There are many crowdfunding platforms that are open to the public. Debt. In this case, instead of investing for equity, you're simply lending money for a fixed fee, like a bank would. But most banks don't have the flexibility or sophistication to offer much creative lending, so investors fill this gap. There are many different ways this can work out, but the most common deal is to provide a loan for someone doing some form of a flip, secured by real property. A few banks will do this, some private lenders will, but hard money lenders exist for this very purpose. They provide short-term loans at high interest rates, and for some projects, this is the best way to get financed. Another method is buying mortgage notes. You become the mortgagee and borrowers pay you every month. There are strategies to buy performing notes, non-performing notes, and you can even package a tape to sell to other investors. But then that would be a lot like flipping. So those are, in my opinion, the 4 broad categories of real estate investments. As I mentioned, there are many different methods within each category, and then each method itself has many different strategies that you can utilize. Our company dabbled a little bit in equity and debt, but most of our experience comes from holds and flips. As always, if you have any questions or corrections, please drop a comment down below. And if you like this video, then smash that like button, that's what it's for. Alright, I'll see you next time.